Okay, recorder is on. Let's make sure that we are modulating. Yes, I am. Let's bring up the slides. Screen share. And let's get this one. Share. Okay, I need a sight and sound check, please. Can you hear me and can you see my slides? Yeah, hello, hello. I see that I'm modulating. Can anyone hear me? Oh, okay. Thanks a lot. Appreciate it. I was afraid that maybe I'd lost it there for a second. Okay. All right. Look at the week ahead for 17th of May, 2020, and I'm sure a lot of people are going stir crazy out there, but we'll just have to hang in there. We're starting to gradually open up in the country here. I hope that people are going to be smart about it. I was out shopping at Publix, the grocery store, this weekend. It was Saturday. I had to pick up some meds for my wife. And I saw probably between 12 and 15, mostly younger people walking around with no covering, not doing social distancing. It's just crazy. And my wife had to spend overnight in the hospital last week and for some blood clots that, thank goodness, went to her lung instead of her heart or brain. And the people at the ER are saying they're starting to see more and more people come in. So people are not really taking it all this seriously. You cannot see Mike. You may want to hit the upper right-hand corner. There's a refresh, reload, cyclical set of buttons in the upper right hand corner, or you may have to exit and come back in. Or, failing all that, we do have the recorder for later. I want everybody to make sure that they take all this very seriously. We sure hate to lose anyone here. All right, the disclaimer. Trading involves risk of loss of capital. Make sure that you know what you're doing and you're able to withstand any losses there before you put money at risk. For those who don't know who I am, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and in business. Active trader since '98, full-time since 2009. I am a technical trader, but I do use limited fundamentals, primarily earnings. I wait until after them. I don't trade ahead of them. I do moderate from H&R candlesticks from time to time, usually when filling in and doing some special presentations, and provide one-on-one mentoring if you so desire. Hit and Run Candlesticks, made up of the Hit and Run Candlesticks Daily Swing Trading Room, Right Way Options, primarily options trading, also on a swing basis, and the LTA Scanner. I do have special offers, once during the middle of the presentation, once at the end. Both of them are pretty darn good. Stick around. We're going to cover, until we get out of the volatile markets, we are settling down a bit, but I'm going to keep harping in case people get lackadaisical. We're going to then go over the economic and earnings calendars, market overview, some trade ideas that I've got, some Q&A that are not stock specific, and then a look at your stocks. And when we get there, I'll announce it. I'll put some plus signs across the chat window. And then only one per person, time permitting. Here we go here. Mike, you should log out and back in. All right. Thanks, Ed. Appreciate it. Okay. Managing risk. I like Tigger over here. Buy, sell, buy, sell, buy, sell. That's what we were doing early on in the first two weeks or so of the sell-off, and in the bounce back, we were getting plus and minus 400 or 500, 1,000 Dow points a day. We're still getting greater than normal average volatility, average to range, but it's not what it was when we first started. But still, make sure that you do realize that you need to preserve capital. That'll be number one. Live to trade another day. We will get through this on the back end. Make sure you still have money and funds available for trading. We are in extraordinary times, and you got to change on when and how you trade. You don't treat this as business as usual. And I'm expecting this to be like ripples in a pond or in a lake or even in a bathtub. It's going to take some time for those to dampen out. Take a macro view of the worlds and look at the weekly, see if there is a trend. We have here lately been in an uptrend, even on the weekly basis, but we do have more volatility intraday. And I will caution people, a week or so ago, people were trading USO. They thought that oil was down and it could only go one way, and that was up. Well, if they were buying oil, that might have been one thing, but they were buying USO. And USO trades the futures, and it got into not contango, but in I'm missing a moment here. The opposite of contango, backwardation, meaning it was cheaper for oil on the outer months than in the current month, and so therefore it went to actually a negative in numbers. Please make sure you know what you're doing. In fact, if you're going to trade any of the ETFs or whatever, especially when they have derivatives, go to the website of the company that's putting those together and out in the market and read their prospectus. Know what you're getting into. We had people who lost a fair amount of money and lose their shirts because we jumped in and told them. But, that's another reason for being in a trading room, to help you avoid making silly mistakes. The bottom line is, when in doubt, don't trade. Sit on your hands. Go away. Do a honey-do list. All right, remember, bulls make money, bears make money, but pigs get slaughtered. Don't be a pig. Economic reports. This week, we're highlighted by Jerome Powell speaking at 10 a.m. on Tuesday, and the FOMC minutes at 2 on Wednesday the 20th. Housing market going to be kind of important here on Monday. That's the only one that I see. Housing starts, okay. Petroleum reports, always pretty important. I used to trade that every week. With the volatility here, I sometimes don't trade them anymore. Thursday's a big day, mostly pre-market, the jobless claims and the Philly Fed. Then after the market opens, PMI and existing home sales. One of the things that I always caution people, know when something's going to happen, a pre-known event while the market is open. Make sure you still want to be in the trade, and if you are in a trade, you're spring-loaded to know that if it starts to go in against it, it could go against you in a hurry. I had to relearn that lesson a couple of weeks ago. I was in a trade, got ahead, taking a little bit of profit, and I got 10 o'clock came around, and I got surprised by an announcement, and it immediately turned against me, and I gave back a bit of money. I still had profitable trades overall, but I could have had more if I had just basically been spring-loaded to be aware of that. Now, I will put out e-commerce retail sales at 10, even though it's black and not one of the green or red dots. It's only a black dot, which is tertiary. That might be important. We might want to figure out whether people have increased their buying retail on the internet to replace some of the lost sales in stores. All right, most anticipated earnings for the week, you can read it, but I see the biggies are things like Walmart. This is before and after before the open, after the close. Kohl's is out there, but again, one of those retailers. You've got Sina, you've got Target, Lowe's. Let's look here. I don't see anything. L Brands and Synopsys here on Wednesday. Got BJ's on Thursday. Nvidia after the close. Macy's is closing down a whole bunch of stores. Medtronic. Ross stores. Our Ross stores are still closed. They're only doing things online, and Foot Locker. All right, let's go on over. Here are the earnings calendar that I've got. And I filter for stocks that are $5 or more. I slackened off a little bit on that. Average daily volume 400,000 and average to range around 14 days. The ones in yellow there have relatively high short interest. I look for somewhere around 10%, but these have greater 8% or greater, and they have a chance if they surprise in one way, shape, or form, or if they sold into earnings, sold out down, that they could get a surprise and a gap in the opposite direction and do a short covering rally. If you're interested in finding out about more how I trade earnings, come join us in the room or go to my YouTube page and search for gaps or earnings or trading gaps, trading earnings. And there should be some out there. I'm going to do one this coming week or two on how I do gaps. People have asked for how do they trade earnings without just being a day trader. How can they trade earnings and do a swing trade? And I'll show them. I'm going to show you people how to do that on a 45-degree runner on the gaps. So if you're remotely interested, sign up for the trial offer that I'm going to present in just a little bit, and you can get that included. All right, how to identify the best trade ideas? Well, a lot of times, especially during the earnings season, which really goes for most of the year, except for a couple of weeks that we go in kind of dead zone, quiet zone, is I scan the earnings list, and I create my earnings list every Sunday and do it for the week ahead. And I pre-filter them for average daily volume and obviously the price and an average to range. Most likely candidates for the big moves will come from an earnings list because they flow to the bottom line. To get people interested in going long, if stocks had high short interest, and let's say that if people were watching it and it was selling off into earnings and suddenly had a surprise, the fact that it had a surprise will get people interested in it. The people who are already long the stock are probably not going to sell, but they're not going to sell out and totally. They're going to get greedy and they're going to try to hang on. And the people who are short, it may get bad enough where they have to start buying to cover their shorts. So that's why I like to look at earnings, because it has a lot of momentum and a lot of impetus to make the stocks move. Some people say, well, I like to look at analyst upgrades or downgrades. I'm like, sometimes they have almost no effect. In a matter of minutes, it wanes. The biggies like Goldman Sachs or somebody like that, it may last for a day. But unless it's backed up by earnings, it doesn't have any legs. It will not last. I do not trade in the pre or post market, primarily because of volatility and lack of fidelity. There are wild swings during conference calls, and that happens, after the market closed for ones in the mornings. So I just watch it, and I create my list and see what happens. And the big boys, they mostly trade during regular hours. Anyway, I use a 5-minute opening range, so I let it kind of settle down where the idiots that their broker called and said, hey, this just reported earnings, it's fantastic, you got to buy some. And they put in their market orders. I let that kind of settle out. And If the stock breaks a 2-minute, 3-minute, or 5-minute opening range, it proves that the move is real and is more than likely going to continue. Another thing I use are tools to help me with that. I create the list and create my watch list over the weekend in TC2000. Put them over into my Thinkorswim, but also into the LTA scanner, which I'll talk about in just a second. And I copy those over and have a scan that I bring up. Or I can look and use my Master Universe list, whichever. I've got 2 or 3 of them that I go. And I have that LTA scanner help me identify pre-market gappers, or after we open, the ones that are on the move. Now you're seeing ones that I had put here in Thinkorswim, but there are, let's see, we've got LTA scanner. I basically have these here. Obviously, I rebooted over the weekend, so therefore I don't have all of the stocks here, but I can bring up the ones here that JD, come here, baby. All right. Here's one that gapped up, and it said that it gapped up on earnings from Friday. And then I can decide whether that is a good one or not. It gapped up over the previous highs. And if you look at a 5-minute opening range, it did open up and pulled way back and basically did a fill the gap, and then it curled back up. Is this one of the ones that I would love to try to get in? Not until it came back down in here. I might have been able to day trade it, but now this is one that I'd put on a watch list for a 45-degree runner as a candidate to continue up here. Let's edit this. Let's get it green for everybody again. Whoops, let's get it darker and set as default. Okay. And that's what happens, and these pop up right here in live and in real, in living color. And fantastic. You can customize this any way, shape, or form you want. Obviously, I've got a number of scans here that I look for. But we're not going to go into great detail for that at the moment. If you want to find out more, LTA Scanner will allow you to have scans working for you for your setups and the patterns that you like the most. You can customize it, totally customizable. I used to pay $250 to $300 for a scanner that was far less capable than this one. And you guys are in for a deal here. There's a free webinar on it every Wednesday at 2. No password required. No password required for to get in the room. And here's the link. Let me copy it out for you for LTA support and training there. And if you want to go the fast start guide, tell you everything about it there. And there's also a sign up link if you want to look at it, or if you want to go and just go to livetradingalerts.com. I'd appreciate that. They've currently got a sale going on. It's regularly $147 a month. Right now it's only $97 a month. I can guarantee you, if you set this up properly and use it, you will make the money back in probably just one trade or maybe 2. And it's well worth the money. Like I said, I used to pay $250 to $300 a month, and this one's far more capable. So if you guys have any questions, Ed Carter's around, and he also is in that support room here during market hours, Monday through Friday, and every Wednesday for a live trading alert webinar. All right, let's go look at the markets real quick here. get over here and take care of the LTA scanner. All right, and I'm going to start here with crude oil. Crude oil is in rally mode. We are in a trend here and have been for the last week and a half to the upside. Now, I already have crude oil marked with what I thought or think are logical levels of support and resistance. About 10, 20, and 30 bucks. And again, we probably got another one up here at 35. What I'm going to do here is I'm going to duplicate that. And take that up to 35. And that's the next level. So if we can continue to move here higher, which looks like with my stochastics RSI based upon the volume we had on Friday, could have been short covering. We could get a short covering rally up into the 30 to 35. So my volume of price profile over here says we're probably going a little bit higher in oil. Okay. Let's see if we can move this out of the way here. Gold. Gold here, kind of moving a little higher if we take ourselves over to TC2000 and look at gold. And if I look at a 3-day chart or a weekly chart, you can see we did the Fibonacci move. I'll delete that puppy. We're no longer in a downtrend here, so I'm going to delete that one too. And let's just get rid of all of them. Drawings, delete drawings, all. All right, nice clean chart. Now this is a weekly chart. I'm going to go back to the daily. It's kind of hard for people to see when you do bouncing around here, but the good thing about TC2000 is that you could just hit one button and go to a 2-day or a 3-day, 4 or 5-day chart. Well, if I go here to a 3-day, I can then probably identify that I was in kind of a trading range here. We're trying to break out of it. My stochastics RSI curling up from the bottom. It's telling me we're likely going to do a breakout. So that's what I'm looking for. Now, this is on a daily chart. On the gold futures, they're kind of lagging just a little bit there, but we're towards the top end. Well, does that mean that it's not a buy? Well, what if we did this on a 3-day? Yeah, we're starting to push up, and momentum still has room to the upside. We'll have to see whether, which takes precedence. Usually the higher time frame usually does. All right, let's look at the S&P 500. The S&P futures are doing, they're really kind of holding on. I'd marked down 27.25 as a price to hold. The volume of price level that it's operating around, its point of control or whatever you want to call it here, is around 28.30 to 28.25. So anywhere between 27.25 to 29.50. Get above that, the next resistance is 31.25. I think we're going back up to at least 29.50, if not 3,000, and then we'll see. My stochastics is pointing upwards. Dow pretty much following the S&P, but lagging just a bit, but it's only 30 stocks. Now, the great one here is NASDAQ. If you haven't been following along with us here lately, we've been touting the NASDAQ as the go-to index for about a month and a half now, since we broke up about 78.50, and we really haven't looked back. And now if we look at XLK technology, it's done quite well. Now the biotechs are in the middle of that, and they've done quite well. Let's take it to a 6 month, and you see how they broke it out to new highs. And though they're really probably helping the NASDAQ, because there are a bunch of biotechs in there as well. Now, the laggard that has been the laggard for many, many years when it lags is the Russell. And that's because it's focus primarily on the small caps that are in the U.S. and very little exposure to international. And it's logical that it would be lagging. At some point, this one's going to come back. I am afraid that a number of companies are not going to make it through the COVID-19 human malware. What's going to end up happening is they're going to go out of business. We're going to get a lot of consolidation, and where that's going to occur in two major areas that I can see. One's in retail, and we're already starting to see that, and restaurants closing and whatever. And I've started to see the rumblings of some of those, like Steak and Shake, I know, is closing some permanently, and what was the retailer? I think Macy's said that they were going to close some stores permanently. J.C. Penney's is probably a toast now. So, that's just where we are. The VIX, we don't have any trading overnight, but we got way up here into the 80s. We'll come back down to the 30s, but that's nowhere near where we were around the high teens and low teens. The average over about the last 20 years has been around 20. So we still have a ways to go. But you can see where this is kind of saying, okay, all this fear is subsiding. Is it real? We don't know. I'll follow the charts. U.S. 10-year hit about 0.6% here. We got down to almost 0.5%. Way over here, we got down to as low as 0.4% on 10 years. But we're trying to settle in under 0.7 to 0.6. So you're not going to get a whole lot with the money. The printing press by the Fed. People are saying, why are the markets going higher with all of this uncertainty and all the things with the human malware going on? Well, what are the alternatives? You're gonna stuff it in a bank at less than 0.5%. I mean, you're basically getting nothing in anything on a short term, 1, 2 to 3 to 5 years. You're almost better off stuff it in a mattress. Well, when that happens and money, cash does not draw very much in interest, you'll see a lot of people will go into riskier assets like equities. So that probably explains why we're going up. Some people say, I don't understand why we're going up, but that's probably why, because money is cheap. There are very few alternatives. All right, I've got some trade ideas. I'm going to go over them, and I'm going to primarily focus on my TC2000 and my Thinkorswim categories to do that. All right, longs. Brunswick Corp is ready to break out over the $50 level. The next level up is probably around 55, which I can see. My stochastic RSI is curling up. It's already had earnings, so that's behind us. It does have a 24-cent dividend, I think paid tomorrow morning. Yeah, tomorrow. So it'll probably be under a fraction of pressure and whatever. But I'm going to put that on my radar scope for a possible breakout. CarGurus. CarGurus had a pretty good run up into earnings. Kind of popped a little bit after earnings, but couldn't hold, pulled back. Got rid of the excess there. I think it might be ready to curl back up and go back and retest this $26 level. Most of the time, high volume spikes like we had here after earnings, they get retested. So I'm gonna probably put on a trade and see if it'll get up to 26. This is probably going to be a stock trade for me. So I'll let you full disclosure there. Cars.com. High volume spike here. Wants to get retested around 7. For those who are interested in a high volume, low dollar value, that's probably a pretty good trade. If we can trade higher than 540 to 550, I think we're going to go up to the high 6s to $7. A lot of people are saying I've got to avoid everything with oil. Well, it all depends. Limited partnerships, people who are pipelines and stuff like that, they're getting paid top dollar trying to store oil and pump the oil around. So primarily the storage, like the tankers, they're being used as floating tanks. I know some people were talking about tankers being filled and floated offshore of Houston and Galveston, just as storage tanks. So they're drawing in some pretty good money. Now CEQP, don't know exactly what they do. Frankly, Scarlett, I don't give a damn. All I know is that it was in an uptrend. It gapped up on earnings. There's the high volume. It pulled back, and I'm going to watch for a breakup over 12 to 12 and a half. And this gap over here, they say gaps like to get filled, and they usually do, but I have no idea what the time frame is. So, but this one is probably ready for the move up and to attack this $12 again, and I'll watch it and see what's going on. ConocoPhillips, COP, C-O-P, been one of the outstanding oil stocks since the debacle. It gapped up on earnings and pulled back. This, if you put in a multi-day, is basically range bound, and it's range bound from the low end of around 38 and the upper end around 43. That's about $5. But the stochastics RSI now has come back far enough that I think anything approaching the higher ends above 45, I'm thinking 48 to 50. So a longer term call option on COP might be in the works for me. I did say I like gold. You can see the consolidation that happened over the last 2-week period or so, and with GDX and GDXJ, the junior miners. And I'm going to jump down here to JNUG. Now they had a reverse split that's not well shown here. You see how we're going back up to this 120 level here. Nugget. Let's do the same thing here. We're doing a breakout. I'm going to go back up here. One more that I like here is Grub. Grub was in rumors to be at Uber. Not rumors, but I think Uber has tried to do a stock merger and offer them some number of shares. I think it was like two shares for every one of Grubhub. And Grubhub said, no, thank you. The stock here, if we get back up over about 56, it will go back up and retest somewhere in this 60 range. Maybe another suitor will come out looking for them. Maybe Uber will raise the amount that they will pay for them. I don't know. But technically, this is a bull flag on a very high volume spike up. Last one on my longs is the Real company. I guess it's a real estate investment trust. This one, bullish engulfing on Friday, stochastics RSI down on the bottom, looks pretty good. I'm going to move over to the only shorts that I have at the moment. I've got two. Trox looks like it might want to go down here to about 5 if you wanted to be able to short that one. Another one that I'm looking at, which I'd love to have a bounce, is Teradyne, TER. It's at a level where I think we could get a bounce, and if it can bounce up to around the $60 level and then roll over. So what you've got is stocks here are not necessarily ones that I want to go long or short on Monday, just out of the box. Some are, most aren't. They're a watch list. So I'm going to watch for it and set the pattern up. In this case, I'm going to probably need a bounce or an intraday bounce. Now we did have on Friday, we did have our bounce back up, and then it came back. I don't know why somebody would pay $62 in the after hours or pre-market. It was probably after hours. Yep, 5:30. and then it immediately reversed. Another reason for not trading in after hours or pre-market. But is this ready for a bounce to come back in to maybe the 58? Let's go to a 60-minute chart. Yeah, maybe a bounce up to the $58 to $59 level would work. If we can do that and then it rolls over, we could get ourselves up for a good short. Where would it be going to? Somewhere in this $51 to $52 level, and then ultimately maybe down into the 40s. But one step at a time. Now, I listed in here the inverse ETFs as the possibility if we get a sell-off in the markets. But I'm not seeing that at the moment. Okay, so we're looking here, the S&P and the Dow look bullish. NASDAQ looks bullish. The Russell just looks like meh. So if anything, I would probably want to short the meh, the Russell. So I would be looking at something like that if you're going to go short. But right now I'm not seeing a whole lot of shorts. We need movement in the market. All right, I did say we'd have a special offer for you, 60-day trial, $49, 60 days for either right way options or hit and run candlesticks. And I think, oh, I don't have it there. Let me see here. Hold on a second. I'll get you that link here real quick. Copy the link. Go right there for the 60-day offer and sign up. Hit Run Candlesticks run by Rick Sadler. Great trader. You can take a gander at the website and what he's done with a very, very small account. In the last year and a half now, he's taken $5,000 to about $75,000. So, you know, I would love to have done as nicely as he did. Right Way Options run by Doug Campbell. Doug Campbell is probably the best options trader that I've ever run across in all of my days. He is very conservative, and people say, whoa, Steve, how can you say conservative and options in the same breath? Well, what you do is you don't swing for the fences. You just use support and resistance the way we would do it any other, and just happen to use options as the vehicle to trade them. So come sign on up, and I think you will be pleasantly surprised. If you want to follow me, I'm on StockTwits. I will post things out there from time to time. I'm not a huge poster, but when I see something, I'll post it in StockTwits. Let me go ahead and copy that for you. On StockTwits, and obviously the YouTube, our weekly webinars here. The ones that I do, I will post out to YouTube, or the ones that I record and have permission to post, I will do. There are a ton of other ones that I posted out there. Go out there and then go under videos and do the search. And things to search for are gaps, earnings, and another one is Stochastics RSI. But the best stuff is in-house only. But I will give you pretty much everything that I know. All right, I am going to open up for general questions, and that is only general questions. Hey, RH, you want to know what the moving averages I use? Okay, all right. On all time frames, I use the 8 and the 17. So the light blue line here is an exponential moving average. The pink line here, or magenta, is the 7 exponential. People say, why don't you use the 9? Well, when I first started trading, I used the 9 exponential. That's a fairly common one. And I came into Rick's room and people say, why use the 9 versus the 8? And I finally got tired of saying, well, they're only approximations. I don't use them as absolutes for trading signals or anything. So I changed to the 8 just so people would stop asking. But 8, 9, whatever you want to use. The 17 exponential and the 20 simple are almost the same, but I want that twitchiness of the 17 when we get movement. And I found the 17 and the 8 work on any time frame that I trade on, from the 5-minute all the way up to the weekly. Now, I'm going to pull up a weekly here. Let's take it here. Time frame. And you notice what happens when you get on the weekly, that the stochastics RSI is a lot smoother, and it takes a number of days for it to change over. So weekly trader, yeah, you could trade that, still use the 8 and the 17. When I see the the 17 crossing down, and this is the when I see them crossing down, that's time for me to start to pay attention. I like for when stocks get, I use this really, the stochastics RSI is a momentum indicator. So when it's down here around 20 or so, or 30, and starts curling back up, and if it's confirmed by price, this is basically a secondary indicator. Price movement is primary for me. Okay, Malcolm wants to know, why do you use the burnt umber crayon and not the brown crayon? Okay. Yeah, I just think that the burnt orange crayon tastes better. Richard wants to know, could you please go over your RSI settings? Okay. In Thinkorswim, it's basically a 733 simple. So if here, go to Studies, Edit Studies, Stochastics RSI, go to the sprocket, and I have RSI linked to 7. I use their 8 and 20 that they put up there. I just leave it there. Then in the K period, I use Wilders and Close, K period 7, D3, slowing period 3. So 7, 7, 3, 3. And for those who use TC2000, I use Stochastics RSI 773% D3. 7733. It works for me. You'll have to play with it to figure out how it can work for you. All right. Now, there were a couple of them that I did not cover on my longs. Let me look at. I covered Grub. Sprouts Farmers Market. Oh, I think these were leftovers. Yes. TPX and Tesco. Tesco is one that I probably should have on the list for the breakout. It doesn't have the Stochastics RSI backing it up, though. TPX, if we can get up over this 5750 level or so, we've got capability of hitting 70. Tandem should not be on the list. Let me remove that. And Sprouts Farmers Market, it already got up, and that was on our list from during the week. I'm going to remove that one. So I need to make sure that I get TPX and Tesco on my list over here. So you guys are going to have to bear with me while I do that. Oh, they were here. I just didn't have them. I had them covered up. Okay. So I thought I made a mistake, but I was wrong. Alrighty then. Let's go back here. If we don't have any more questions about non-specific stuff, Okay, Rick jumped the gun here, but I'll let him get through on that one. Do I have a 3-day chart on real? Get real. All right, that's the daily, the 3-day. Sorry, because there's one. Oh, and that's why the TPX and SFM. SFM probably is not a bad one to be on the list on the daily, because I had made a mistake and I was on the 3-day. Anyway, real. It's a 4-hour. Let's look at the daily. It did a march up, pull back, bullish engulf. Now I'm going to show you the 3-day. It's okay. It needs to go higher, and probably above 13 and a quarter, 13.50, and keep going. The stop would have to be under about 11.60. Does that work for you there, Mr. Rickster? Okay, let's see here. Hold on. Okay. Trader X wants to look at ELY, Callaway. Let's go back to a single day chart. We had a move up. I think this was around earnings time, which is why that one right there. It did a pullback, and here's the problem I've got with Eli. You've got this as overhead resistance, and yes, every stock that we're going to look at probably pretty much is not at all-time highs. They're going to have overhead. It is curling, the stochastics are curling up, so the momentum's looking pretty decent. It's possibly worth a shot, especially if you can get something like in a hourly chart, something. But this right here, you can see on the hourly, that's an awful lot of resistance of sellers overhead. Now, if it comes back down and curls back up to 13 again, that'd be a whole different story. I think it might need a little bit of room. However, it is a rounded bottom breakout. So right now, if I move that and I take it up to the 200, yeah, that's $4.66, about 36%. If you take it up to the 100, which would be an intermediate target, 277 and 21%. So not looking so bad, but you do have overhead resistance. You could go long. You could sell at the first sign of weakness. Thomas D wants to look at Texas Instruments short. Well, a couple of things with Texas Instruments get my attention is that it looks like it's trying to, let's delete this puppy. This area right in here looks like it's trying to act as support. And I'm primarily looking at this stuff over here to the left and extending it. And it just happens to be around the 50. I don't use the 50, but I mark the 200 to 50 because some people will tend to run into buyers or sellers there. Well, stochastic RSI is near the bottom. I think if you got it to bounce up to about 110 or so and then it rolled over, maybe. But I don't like it as a short right here, Thomas. I don't know what you're talking about, Chris, but okay. All right. Do I use the 3/8 trap? Yes, if you look at, I'm sorry I missed your things. I wasn't scrolling down at the bottom. But you can see I have the V-stop and 3/8 trap. My variation of it, a standard 3/8 trap with a V-stop. I mean, these two are a little bit different. A 3/8 bear trap, and then this 2-bar low reversal is something that I do. But yes, I use them. I don't consider myself necessarily an expert at it. Rick Sadler and Doug Campbell are the people you need to really talk to about that. Lee wants to know how I interpret the stochastics RSI curves. Basically, coming up from the bottom from a low value below 30, and price. You see where I've got the crosshairs here. It's stochastics will more than likely move up first, but it's driven by price. And then we got a breakout on SFM. Now this is ahead of earnings, and good volume on a breakout, and then it did a pullback. Then it did a 45-degree runner, and then a pullback. And you can see how it got to the kind of an intermediate top, but it kept going, and then your stochastics RSI started to roll over, and it bottomed out where we had a doji bullish engulf. And what I use for there, Lee, is I look at whatever the candlestick pattern is, the three bar reversal here, and then I go down and look and see, is my stochastics RSI confirming it? And then it gives me more confidence that this might succeed in breaking out. My number one criteria is that I would buy down here around 21, and my first target would be a little over 22 here, and I'd sell at the first sign of weakness there and take part off the table, and then trade it and trail that up until it failed. Now I've got 2750 marked over here for some reason. Yep, we've got over here anywhere from about 26 and a quarter to 29. So that was just kind of a marker, line in the sand to say, hey Steve, there's something back over to the left. You might want to look at it. And sure enough, it got up to that and ran to the sellers. Now, will it pull back to maybe the $24 level and then curl back up? Possible. That's why it's on my list. Ken MC wants to, do you have any go-to stocks you trade often? Not really. I used to have them. I used to trade United Technologies, and Raytheon was RTN, is now RTX. They've kind of gone out of favor, and with the with all the gyrations in the market, I tend to go very, very short term, Ken, and I don't try to lock in on any. Now, let me back up and say I do have a high option volume list. My skinny down list of stocks that I have in my mini universe, MINI, has only 489 stocks in it. And I will use the scanner against those because they have high option volume, and I can usually did pretty good action for one, and I can usually get pretty good fills on those. So I will look for those first. But my first and foremost reason I talked to you guys earlier about earnings, that right there, earnings list, that's my go-to set of stocks for any given week. I'm going to probably see the most movement and more bang for buck, and I'm a quick hit and run kind of guy, and I may only be in for a few minutes or hours, or I could be in for a few days, but I'm hardly in for more than 3 or 4 days for my trading. Richard Funk. Hi, Richard. How you doing? You want to look at Sienna? All right. I traded Sienna. Boy, you want to trade long into earnings. It's a couple of 3 weeks out, so not too bad. Let's go to a 6-month chart. I traded Sienna back here when it did this little J-hook and got out. I have not gotten back in because I really think it's kind of a mess at the moment. We had a heck of a good day on Friday. Maybe a breakout above 50. 50 might work. Let's go here. Yep. So Sienna, so you can see that it's breaking out. And if we're not at all-time highs, we're pretty damn close to it. So anything above 50 is a breakout. And stochastic did not get oversold down to to the 20s or 30s, but it is coming up from below the halfway point. So it's not bad. Chris C. Yep, Glenn wants to look at CAT as a possible short. That's a 3-day. There's a weekly. Well, weekly, they got down to 100, but they bid it right back up. We'll get rid of this puppy. And get rid of that. So we're already through earnings. So from earnings, it went up and then came back down. We're kind of in a downtrend here for Caterpillar. If it gets back up and you get a sell signal, you're going to need something like maybe the 3-bar pattern like we got here. That, when it opened up the next day, that was a good short for a couple of days. And then it kind of bounced up. It got up here. Another 3-day pattern. Right there. That was a decent one for a short. But it doesn't look like it's going mad. But yeah, it does look like it could be a short. Watch for that, making this one a 3-day reversal. Maybe it gets up there and then reverses back down the next couple of days. Doll, hi, how you doing? GTN. Grain Television. I'm going to go straight to a weekly to show you we're in this big box. This is consolidation. Now, let's see. Now I'll go back to a 3-day, and you can definitely see it here. Okay, now I refine it a little bit, and then I go down to the 1-day, and now you can see it a lot better. It's very difficult many times to see price consolidation or breakout on a 1-day. The turnaround here is in progress. It's part of a bottoming process, but it's going to take some time. I don't think this is done until we break out of this box. Probably until we get above 14. So I wouldn't be all mad about trying to, in a mad rush to go long. Maybe the breakout and the pullback and a retest. So what I would say would be this. Let's say we get a breakout. We do a pullback and retest the breakout, and it shows you that really is support. You go long, tight stop. You have your first target at the swing level high, and then go higher. If you don't do that, let's just say that we got up here, let me get a new drawing tool, screen draw, whoops, color, green. Say we go up here. We go up here, then suddenly we start pulling back. Well, if you do that, if you go long here, where's your stop? Well, some people say your stop's got to be down here. You could put a stop in below the candle that you've gone on, but it's going to be a long ways. Whereas if you let it pull back and then start to curl up, I can guarantee you your stop is probably going to be a lot tighter. So I always try to wait for the thing to make a bottom like it does right here. The stop would be just under here if you went long now, but you got to realize that it may not get over 14. So if you can do that, let me do it for an hourly chart. I'm saying that your stop's going to be at below 1170, maybe even below 1150. And I see 13, let's go to a 2-hour chart. Well, this is probably going to turn over. Let's just say that it did an immediate reversal. I'm really looking at about 75 cents to the upside, but my stop to the downside is $1. That's not a good reward to risk ratio for me. I just don't quite like it. That's usual with stocks until they get a breakout and then retest. Okay, hope that helps, doll. We got your cat, Mr. RH. Jenny B wants to look at DHT. DHT, you did not say long or short. However, this is in a downtrend. Exponential, all the moving averages are pointing down. I would say that this potentially would be a short under probably about $6 and 10 or 15 cents. If you were looking long, no way. Make it move higher, make it curl back down, show you where that support is, price, and go long then. Look for that pattern. GP long AOBC. Well, I'm seeing a similar thing here. Is it's trying to gradually go higher. It's bouncing along. We've got this excursion here. If it wasn't for those 2 days, if I wanted to say that those were outside the box, then yeah, if we get over $10 on Monday, sure thing. And where would the first target be? I'm saying it's somewhere up here around 1080. Now, risk reward is long from 10 up to 1080 something of 80 cents or so, and your stop 70 cents or so. Is that good enough? That's a little over 1 to 1. It's not as close to the 2 to 1 that I'd like to be. So to me, the reward to risk is really not there for me. Okay. Time for some Rio protection. Okay. Can you post tonight's recording on your? Yes, Frank, I will post it. That's why I'm recording. And Mervick wants to look at Bristol Myers, and I am going to have to put down the hammer here. No more symbols, please. Okay. No more symbols. Bristol Myers, it's getting a little tired. You can see what it did on Friday. Early on Friday, it looked like it wanted to try to go up towards the $67 area on volume. So right now, it's basically sending me as a doji. It's indecision. It doesn't know whether it wants to continue to go higher or come back. Most of the time, they like to come back, but if this still tries to trade higher on Monday, notice it's sold off primarily in the last half hour to hour of the day. If it comes back up and starts shooting through 65, boom, the 67 or so would be in the cards. And so those would be my targets. Now, make sure you get a good reward to risk ratio there. BB, I see that you put KR, but then I think you canceled it. That's not a good long. FSM for Phil. Nice breakout on volume. Silver Mines. Is FSM... Okay, on earnings, the problem I've got here, look over here to the left. All this overhead. We needed to be on in at 350 to ride it up. Now I've got a problem. We're going to need to go sideways or consolidate or get some sort of intraday consolidation, and maybe it'll break out above 4 1/4. But right now, I wouldn't go along with your money. Okay, so the problem is it went up, and the train's already pulled out of the station. Reggie King wants me to look at KMI long. Let me look at it right here too. Oh, you can see the consolidation. I can see it between 14 and 16. Kinder Morgan. Yeah, you can see that's basically got Zilcho here. Let's look at the 3-day chart. See the consolidation 5-day chart. I want to take you over to the EMAs. I'll look at here. If I also can't figure out what's going on, I'll even look at the exponential moving averages. I've got only the 8 and the 17 here, but that's flat. That's dead as a doornail. It's going nowhere right now. So what's going to happen to make that change? We're going to have to break up. There's a 3-day chart. We're going to have to get over 16 and potentially even come back and retest it. But right now, I don't like it. It's really dead money. Apple long or short? Oh, you don't know which, huh? Well, I would say Apple's more looking like a long. We have a piercing, but we are in the middle of a pullback. See here? This tells me that we're in the upward trend. In Apple, I don't want to go short until I get a flip. Until I get the 17 above, the 8 coming back down to the 17. We get into a solid downtrend. While we're in the uptrend, I'm looking for bullish signals. In this case, we might need another day or two, but we are probably going to go back up to 320 or higher. Okay, Patrick wants me to explain how Delta works. If the Delta on a call option is 0.3 and the stock goes down $1, will my option lose 0.3 or 0.7? Thank you. It's a good question. Let's see. Okay, you own a put or you own a call? Let's see. Call option. Well, first of all, you shouldn't probably be in a call option with 0.3. We normally recommend being on a call, the deltas of 0.7 or higher. So in a 0.7, it would go down 70 cents. 0.3, it says that Delta says that it will go and move 0.3, the standard wisdom. But I'm going to make a hazard a guess. Hold on 1 second. Let me get over here to my main. I need to clear something out real quick. Hold on. Okay, I need to privatize my account. Okay. All right, now I can bring it over. Okay, this is where I've got all my stuff. Okay, if you were on... You have any stock that you were looking at? Let me find one that's actually it's KMI. Yeah, it's too small. Let's take Furtive, one I traded the other day. Okay. All right, June. That one has a 0.27, which is approximately 0.3. All right, what I'm going to do is I'm going to use a theoretical price. Let me do a reset here. So if I said that on 517, 18, 19, whoops. On 515, the theoretical price would have been $1.09 on the call option. So we got to remember 109. I'm going to use the thing right here. Oops, go up. And I'm going to make it go down $1. And this goes down to only 73 cents. So according to this, it says it goes down 30 cents. However, I'm gonna hazard a guess that it will go down a little bit more than that because of the fact that the human emotion will drive the prices lower. There will probably be fewer people to buy, but theoretically, it would only go down 0.3. However, please do not take that as, oh, that's lower risk. In fact, the probability of being in the money at options expiration is only 23%. Now let's take it back and reset. Yeah, 23%. So do not buy options that are out of the money. Please don't go, if you're doing directional calls, make sure you're as close to 0.7 or higher as possible. And make sure you have good volume. And this, it doesn't have good volume. It has decent, it had no volume out there. And that's not even a good Teradyne. Teradyne has okay volume. CNC. Volume and open interest. Okay, so this has got decent open interest. It's got one that you would have a 0.6, 0.7. Choose between the two. Then I'd probably choose something that had a good spread here. Maybe even 0.67 would work for me. I'd be pushing it just a little bit to the downside, but not much. Because I've got right here, I've got a 50-cent spread here. I've only got a 20-cent spread there. I had more volume, and I'm not giving up but 0.03 on Delta. All right, I hope that helps. Let's look at PNS. Let me move this out of the way again. Oh, are you sure pins. Okay, I got a problem with this. Look at the EMAs. We had a short-term changeover. Is this going to flip back over and go back up to the upside? Well, it might. But what I'm going to do is I'm going to show you what it's going to have to do for me to go long. What this has done, it's gone up, down, up, down, up. And what is it making? Lower highs, assuming this doesn't go higher, and lower lows. Lower lows plus lower highs to me is down. Okay, I have to have this kind of zigzag. I need higher highs and higher lows for me to go long. This has done this long enough to zigzag pattern that more than likely Pinterest has changed character. We had the 8 flip under the 17. Could it flip back up above it? Yes, it could. If you use the volatility stop, the red and green dots, Doug uses those and he does not go long anything below, and it has a red dot above it, and doesn't go short anything that has a green bar below it. So he trades in the direction of the vol stop. So green, good to go. Red, stop sign, or go short. Hope that helps, Don. Thanks, Ed. You answered it. Sorry. Cancel. Can look at Twitter as a possible. Okay. First thing I'm seeing is kind of a consolidation here, going sideways. Whoops. I can see that now by looking at the EMAs. That these are kind of training wheels, crutch. I'm probably going to want to break above about 31. Right now, I'm not really seeing much positive about Twitter. I don't see a lot negative about Twitter. I just kind of went, well, it's kind of trying to make up its mind what it wants to do. Unless it breaks above this level or below that level, I don't have a trade. It's not making higher highs or higher lows. It's just making equals. And that is chop, consolidation. It is where your money goes to die. Okay, gotta go, Chris. Okay. Echoing not clear. Well, I'm very most likely, Rajendran, that if you're echoing, you could be logged in twice, or you're getting an echo from your internet connection. All right. Last call for alcohol. Any non-stock specific questions? If not, I'm going to call it a night, and I will render this and get it posted to my YouTube channel. And as soon as it happens, all you have to do, remember, is YouTube/Top Gun Trading. All right, and yeah, sure, Lauren, I'll do that just for you. Jenny, you're welcome. And if anybody hasn't signed up, just think 60-day trial offer, $49 for 60 days. You can't beat it with a stick. Let's go back over to your square. Are you long, short, or looking that, Lauren? I'm looking at about 85.5. Hey, Robin, you're welcome. Hope you get to see your relatives up in New Jersey soon. But be careful. We're curling back up. I wouldn't go long here because of the stop. I wanted to pause or pull back a little bit. Long. Ta-da. Let me do this. I need to make sure it goes to the bottom. Always. That's why I missed it. If you're long, stay with it. Watch and see what happens when it gets above 80 to 85. If you're not in the stop, 1 hour. Yeah. 1 hour, 2 hours. We're probably gonna get a pullback here. Maybe not. Maybe we'll just get a little bit of sell off and close the end of the day on Friday. Yeah. And looking pretty good on the 30 and the 15. Still solid on the hourly chart. Does that answer your question there, Lauren, or did I totally miss the question? Kind of. Go ahead. I'll stick around. Ask away. Are you already long or are you not? If you're not long, you need to wait for a pullback or a consolidation sideways. If you're long, you obviously know where to trail it. My biggest problem with Square is we're kind of late in the game. It's getting up close to this 85, although a couple of days, 85, $5. Boom. Average 5% a day, average true range 4. Yeah. You can do that if it opens up higher on Monday. But here's the problem. Let's take a 30-minute. Let's say it opens up at 81.5 or so. Your stop would have to be on a 30-minute chart, trading that, would have to be $1.25 below that. And upside, okay, could be $4. Okay, that could work. I'm just looking at reward to risk. It could work. It's because this thing has such a wide range during the day. But make sure you can stand that risk of, the $4 risk. And may try, yeah. Well, it may not be. If you use the daily chart and use the vol stop, it's too far away. The only way you're going to be able to trade it there, Lauren, is if you drill down somewhere and trade. And then if I use that as an entry, say an hourly chart or a 30-minute chart, I've got to trade off a 30-minute chart. Hey, Sean, how's it going? Nice question. The red and green dots are the volatility stop. And they're set as 10 as a true range period, 1.5 multiplier. Obviously, an uptrend is green and a red is a downtrend. Did that answer your question, Sean? I think that answered your question, Lauren. I think you knew the answer already. You're welcome, Bob. And notice how the volatility stop, Sean, moved up. Then it kind of stabilized as we pulled back. Okay, sure. take a screenshot of it for you. There we go. All right, so now we've got that settled. I want to say good night to everybody. Be smart, be safe. Aloha.